Hello and welcome to Edison TV. Today I'm joined by Jean-Marie Mognetti, who is CEO at CoinShares International, a leading European digital assets firm that provides institutional and retail investors access to digital assets in a secure, transparent, and regulated way. The company is built on a strong technology backbone called the Galata platform, which is the foundation for its two major business verticals: asset management platforms, including the ETP and ETF platform, and the capital markets infrastructure, which is active in liquidity provisioning, fixed income investments, DeFi investments, and proprietary trading based on low latency, data neutral strategies. Jean-Marie, thanks for joining us today.
Thanks for having me, Miloš. Glad to be back.
Now, despite the turmoil last year, we saw significant technological progress in the sector. Probably some of the most important developments include the Ethereum merge, as well as projects aimed at connecting the real-world assets to the on-chain world. What do you consider the major advancements last year, and what are you excited about in this respect going forward?
Yeah, technology has been a big driver recently. I think what you saw happening last week, i.e. the merge between the consensus layer and the execution layer on Ethereum, has been an extraordinary technology achievement. Not only the technology achievement, but it's also demonstrate the fiduciary duty and the duty of care of the Ethereum community and its developers and consensus and the Ethereum Foundation. So it's very, very interesting to see the Ethereum kind of like network in general coming out of so many years of work to deliver something which was actually sold by many as never happening. Against all the odds, the Ethereum community delivered without any hiccups. It was pretty smooth and pretty transparent. It was a great moment for the whole Ethereum community and all the blockchain followers. And if you want to look at metrics, there was about $250 billion of market cap on Ethereum, 10% of that being staked. You can imagine that if something was going wrong, Ethereum was going to zero. So the fiduciary responsibility was critical and deliver, first class. So really, really pleased with that. And I think the market is seeing that. What is it doing there is like asking question about what's happening to layer 2, which one going to be interesting, but more importantly, what's going to happen in the layer 1 war. If you remember, in previous discussion we had, it was all about, this new blockchain is an Ethereum killer. So Ethereum killer was kind of the big narrative. And now it's like, well, Ethereum deliver what nobody was thinking it will deliver. Good luck to you.
Yeah, absolutely. I agree. Now, digital assets seem to have grown too big to ignore. And even though the current adoption rate varies by investor group, what do you see in terms of adoption, and what should be the major catalysts for an increase in institutional allocation to digital assets?
So, if you go back to CoinShares, CoinShares has been tracking its, stakeholder, note holder, depending how you want to call it, since as early as 2015. And what used to be at the very beginning a very retail-driven or consumer-driven market is becoming more and more sophisticated and more expert in the digital asset class. And we are seeing now, I would say, family office, asset management company allocating directly, buying Bitcoin spot, or indirectly through ETPs in their prime brokerage account. So we see this kind of migration happening as we speak. We saw it in the previous cycle, mainly in the US. What's going to be interesting is how the new cycle, which is giving us some indication of starting right now, going to trigger some same kind of phenomena in Europe and in Asia. So that's what we're looking for. And in terms of what are people waiting, clearly in Europe, in a post FTX, in a post Luna environment where the regulatory scrutiny is very, very high, a lot of institutions are waiting for regulatory clarity. So we're seeing MiCA arriving in Europe, which is a great news because it finally gives clarity. It might not be perfect, but at least it defines clarity for the players. We're seeing the US, yesterday there was a big hearing in DC where Gary Gensler was asked several, I would say, uncomfortable questions by the chair to try to resolve the issue of how do we regulate crypto, and who is responsible, CFTC or SEC. So, things seems to be willing to move. They're not moving yet, but they are at least willing to be. And Asia, Hong Kong came out this year early, very, very actively, starting to promote a framework on the SFC. So everything is going really in the right direction on that front, and I think it will be a key component of institutional adoption.
Thank you. And maybe can you tell us to what extent have you changed your strategy over the last 12 months or so? You've decided to wind down the B2C business and take a more cautious approach in your capital markets infrastructure business. At the same time, you saw decent inflows into your CoinShares physical product and decided to launch a multi-asset ETP. So can you maybe shed some light on these developments?
I think CoinShare at its roots is an asset management company. We're coming from commodities background, the founders. We were managing a hedge fund in commodities. We launched the very first hedge fund in crypto back in 2014. So really our background was the hedge fund world, the asset management world, and the investment world. What we realized is over the last I would say, since 2017, to make it simple, we try to stretch ourselves in many other directions. And sometimes the market isn't really appreciative of us trying to be not so focused on a certain number of activity and going too far away from what is our core knowledge. At the end of the day, we're a 100 people company. We're not 1,000 people. So the idea is how do we refocus on our core and how do we go from there? So from a legacy perspective, CoinShares was really focused on three things. If you go back last year, there was our passive asset management, there was a capital market activity, and there was a incubating consumer business. We realized that consumer business was way too far away from our roots and our DNA, and that we didn't have the capital adequacy to start spending money on this kind of acquisition program. So not for us. So we just okay, we're going to shut down this business and refocus on our two other business. And at that point, the idea is okay, well, how do we start making this business more consistent? And the idea was to say, okay, well, we have this great passive asset management business. And what we are seeing right now is people asking to get diversification in the portfolio choice by being able to allocate to active strategy. So we said, okay, well, realistically, the capital market was born out of the end of our former hedge fund program. So now that we build a custodian of Nomura, now that we build a bank in Switzerland, now that we build different things, so there is enough infrastructure in place to relaunch a proper asset management on the active side practice. And more importantly, to define what should be the standard of good governance and good asset management in digital asset. And that's really what we're looking at.
Thank you. And given the high-profile failures of centralized digital assets plays last year, which were often accompanied by poor transparency and regulatory oversight, have you recently seen an increase in investor interest in well-structured, regulated products such as the CoinShares physical product suite?
I think last year events show that transparency and trust were kind of key elements in crypto and digital asset business. More importantly, the fact that we're a listed company is also demonstrating that it's not just something we say, it's something we do. And that's very, very different because, as in a lot of businesses, there is what you say and what you do, and sometimes it's not always the same. So at least at CoinShare, we do what we say and we say what we do. So it's very, very transparent and very clear. Now, in terms of, is it a good advantage for us in terms of marketing and in terms of business development and in terms of distribution of our product? It is without a doubt an advantage on our competition.
Thank you. Jean-Marie Mognetti, CEO at CoinShares International. Thank you very much for your time.
Thank you, Miloš.